Hello class, and welcome to the video lecture for analyzing financial statements. The first learning unit covers the purpose of financial statements and how to prepare comparative balance sheets. Recall from Accounting 110 why financial reports are created. The purpose of financial reports is to assist the users of the reports with making business decisions. These users can include investors, creditors, and management of the company. Some typical questions one would ask of a business might include questions like, how profitable is the business? When will dividends be paid? And can the company afford to expand? An analysis of financial statements assists with making decisions. Some common analyses include a comparison of current numbers with the numbers of a previous period, like last year, or a comparison of the company with other companies in the same industry, or a comparison within a report of one number with other numbers. A commonly used analysis tool is a comparative balance sheet. A comparative balance sheet has current and past financial reports placed side by side so the balances can be compared. Horizontal analysis is the term used when amounts on the same line, which is what is meant by horizontal, are compared. This type of analysis can identify trends. This is an example of a comparative balance sheet and horizontal analysis. The last column is the percentage of increase or decrease from one year to the next. For example, cash decreased by 25.5% and accounts receivable increased by 25%. To determine the percentage, you take the amount of the change and divide it by the dollar amount from the old year. For example, the ending balance in cash was $4,080 in 2012 and $3,040 in 2013. That's a decrease of $1,040. To determine the percentage, take the amount of the change, which is $1,040, and divide it by the amount from the old year, which was $4,080. This results in 25.5%. Vertical analysis is comparing numbers on a report using a base. Once a base is chosen, all other items are expressed in terms of a percentage of the base. The most common bases used are either total assets, or total liabilities and stockholders' equity if a balance sheet is used, or total sales if an income statement is used. This is an example of vertical analysis. For both years, each account balance is expressed in terms of a total. For example, cash is expressed as a percentage of total assets. Notice how total assets is 100%. If you add up the percentages for each asset, you get 100%. The same thing is done for total liabilities and stockholders' equity. This is an example of a report called a common size statement. It's the vertical analysis, but no account balances are listed, just percentages. So that's the end of Learning Unit 1. In the next Learning Unit, we'll look at comparisons of income statement accounts.